Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me by phone, we have Marc Bhargava. He is the co-founder and president of Tagomi. We're going to take a look at the cryptocurrency reaction to the coronavirus and the global volatility that we're seeing in the markets. Marc, it's great to have you with me as always. Rather be in studio, but we're doing our workaround. And the volatility with Bitcoin in particular is something that certainly market participants are taking notice of.
Yeah, absolutely. There's a lot of fear in many different markets right now, and crypto is no exception. So starting last week, we saw surges in volume and at the same time pricing starting to crash, especially across Asian exchanges. And then through the weekend, we saw that to continue, especially in the last 24 hours, with now also US exchange volumes really picking up, and again, in a negative direction. So fear has very much engulfed a lot of the crypto markets, not too dissimilar to what we're seeing in equities.
Yeah, it was really interesting because this happened last Sunday night and it also happened the Sunday before. Since US equity exchanges are closed over the weekend, your futures don't open up till 6 p.m. Eastern on Sunday night, cryptocurrency exchanges were open and they had the same pattern that we saw in the futures market. It's almost like it foresaw what potentially could happen in the equity markets.
Yeah, no, absolutely. There are definitely differences between equities and markets and crypto, but at least for right now, in this period of time, crypto is sort of acting as a risk-on asset. And so you're seeing the correlation between the two go up significantly. And in some ways, yeah, crypto is a leading indicator on Sunday nights. That's absolutely true right now.
All right, let's take a look at the regional exchange volumes, what you're seeing with the US exchanges and of course the Asian exchanges.
Yeah, I think this is really interesting because, there are a lot of different subgroups. First, in terms of crypto in the US and in Asia, we've been seeing different patterns and also different reasons for the sell-off. So we saw the sell-off more based in Asia last week than in the US. And a lot of that was happening through different folks selling there. And then more recently in the US, they've also piled on to the sales. So it's interesting to see, where the volume is being driven. I think here in the US specifically, a lot of the selling has been due to margin calls. So folks who had been levered up and been taking these long positions, suddenly got margin called and had to sell more. And not necessarily margin called in equity space, but more specifically to lowering crypto prices. In Asia, you had some of that effect as well, but you saw the selling started, much before it.
So you recommend tracking the volumes by region as the virus spreads. Why are you recommending tracking by region versus overall?
We generally track by region in general, regardless of the virus. And that's because we do see, while there's a lot of connectivity and pricing between the US and Asia, there are also separate micro narratives, we like to call them. So you'll a lot of times see news in the US that might be really negative for crypto or for Bitcoin, or regulatory action against different tokens. And then you don't see, any price impact. And that's because the Asia market has a different view and a different news cycle. So historically, actually at Tagomi, we always try to track both sides because different micro narratives are in parallel. Now, many times they start feeding off of each other and, crashes in one place, like in this case, more of the selling happening in Asia obviously sent prices down. Now prices are lower here in the US. So US funds who had levered up, of course, have to liquidate. And so, of course, the narratives are very connected. And you see that play out in this story of a sell-off primarily driven by Asian volumes, but then moving prices lower. And then that, of course, creates now more of the American funds also selling off. So we look at the different micro narratives that are happening. And many times they're very closely linked, this time not being an exception.
All right, Marc, let's end this conversation on a positive note with Tagomi joining the Libra Association. Explain to us why that's so important and how is this good for Tagomi?
Yeah, absolutely. So I think we're always pushing for more use cases in crypto. Store of value is certainly a great one. Payments is another major one. Of course, smart contracts. On the payment side, we really love the distribution possibilities of the Libra Association between Facebook and Uber and Spotify. And so we think it's an incredibly ambitious project that could have mass distribution. And I think right now, especially at this time in the market, having more use cases, more distribution is definitely something that will help pull us out of a bear market and make us into more of a bull cycle.
All right, Marc, great to have you join us as always. Thank you for taking the time. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.